Hey guys, Francis the Market Sniper doing a traditional FX clip here. Some while ago it was, we were analyzing the Turkish lira, and we came to the distinct conclusion, despite my Turkish students' dismay, that in fact the following setup would indeed probably lead to a downside break, and it was time to go long the lira against the dollar, short the USD/TRY. Now that was into the tooth of Erdogan's election, and I want to also remind people that this has been a trade that we've traded many times, and we've only ever traded the USD/TRY long. Continuation patterns ad nauseum. I think we've had about 6 or 7, most of which I can remember starting from 2012. Quite a few of which have been posted on YouTube, not all of them, but they've been traded with zeal. And it was during the whole emerging markets pressure time period and the dollar preeminence. So it's quite a shock when for some to see us actually say we're going to go short the dollar and long the Turkish lira. This was into the Erdogan election as well. We did get a bit of a break there. We had a first attempt to go down on a gap that was closed in a rally, and then a second move down. Lovely little primer squeeze. So loss stops could have been put at this juncture here, at the high 3 there. In fact, it's a little lower because I'm at roughly the high 2 there. There was a high 1 and a high 2. And then you would have made a nice little run to the second interim. You would have had a rally up to the funnel, not once but twice. You would have had a grind line failing to hold, and now resurgence to the downside. Now, to be clear, nothing's been achieved yet, the 3.44, but you're talking about a currency that had made virtually the 4s. What are we at this top tag? 3.94. To call it down to 3.44 is quite a substantial move back, pullback for an emerging nation against the almighty dollar, which I think is as much a part of dollar weakness as anything else. So get rid of you. So it's an interesting synopsis that methodology will always supersede belief. You will not want to short out of belief, and often those are your best trades. In other words, they're the most uncomfortable ones to put on. And for us, this was always looking like it was a flat bottomed, very low level of proportionality to this melt up level. It was holding the point of the rising wedge where you blasted off with a final exhaustion gap there. This was all the way back down to the apex of that breakout of that melt up, and this was always potentially forming a reversal given the melt up nature of the moves here. Since then, we're attempting to hold these levels, and this is a wind up just to break down to plumb new lows in review. That's how it looks. That said, the target is not made. The markets can still shock you. We could turn from here and smash it up. It's also not been the quickest. We've got until this date over here, which is roughly sometime I would expect in July, near the end of July, for the target to be made. And there's still some way to go. But just an example in case of trading what you see, not what you believe. And I want that message to be taken. 6, 7 macro big time frame trades, trading only short on the lira and only long with the dollar, and then recognizing when the tide has turned and applying the methodology according to how it's taught in the HVF method. More information on that, get in touch with support at the Market Sniper. Make the unexpected money when everyone else is trading their belief systems. This is Francis. Hope that's interesting and useful for you. Support at the Market Sniper for further details.